Oh, wait, hold on a second. Gotta turn my charts on. All right, sorry about that. Thanks for your patience. All right, hey Kai, how are you? Okay, cool. So good to see everyone. If you're new to the stream, let me just explain how this works real quick. It's not like I got my regulars here. Okay, great. Yeah, I don't know why I do this, man. I know why I do this. I do this for Kai. I do this for Alex and Booty Cheeks. That's it. That's the only reason why I do this. Okay, so I got to tell myself something. Otherwise, I won't even show up to these streams. So anyway, um, if you're new to the stream, welcome. So real quick, I'm going to run through the economic calendar. They're going to run through these charts, and uh, and then we'll go from there and see if there's any particular charts people want to see or any scenarios. All right. I hope you guys have been enjoying my other channel. Tell you, it's been tough with the numbers in this recent time, man. I mean, I don't know. The numbers have been very low, like just in general, I guess. There he is. All right, there he is. The imaginary. He's imaginary. I'm imagining him, but no, I'm not. I can't be imagining him because look, I could show his comment. All right, cool. So anyway, so yeah, I put out some interesting shorts. The most I put out a short about fair value gaps, and actually it's like my best performing video, believe it or not. Fair value gaps. Okay, that just shows where everyone's mind is. So all right, so let me just show you real quick. Let's just do this economic calendar real quick using the one here on this platform, right? So we're only looking at this week, right? And I'm only looking at U.S. numbers. I'm not really interested in other countries. So today looks like we had these, right? So this is all. But what's today? Today is Monday. So here, let me go back up here a little bit. Can I scroll this thing? Tuesday. Okay, no. So there is nothing on Monday. As you can see, Tuesday is empty here. Wednesday on the 18th, right? So we have the PPI at 8:30 a.m. Eastern time. You can see that here, right? And we can learn a little bit about the PPI number. So that's that. That's usually not a big deal compared to some of the other numbers. And then look, this is the highlight of the week, right? We have the Fed, the rate decision in the FOMC meeting. So this is obviously at 2 p.m. Eastern time, and 2:30 they have the press conference. This is very important because now this, I understand, this meeting, they're not expected to cut rates. If you look at the Fed Watch tool, I believe it's like 0% chance or something like that, or it's like a 98% chance they do not cut rates, something like that. So, and that makes sense in light of all the things that have been going on. So if they do cut rates, whatever, it's going to cause chaos most likely because it's just not expected. So it's something to keep in mind. Also, any further guidance, keep in mind too, I believe it's either this one or the next meeting where that's it for Powell. Powell throws in the towel. And then we're going to have that guy, Porsche, what's his name? Hey, Savi, how you doing, Savi? Haven't seen you in a long time, from Brooklyn. How you doing? How you doing with those free buses over there? What's that guy's name? The new guy we're going to get. I can't think of his name right now. I can't think of it. Anyway, you guys will remind me. It's Monday. I can't remember that guy's name. Anyway, in May, we're going to get the new guy. Okay? And I can't think of his name. I know it rhymes with Porsche, but I'm just not thinking of it. Anyway, that's going to change things, that guy. Okay? So he's more hawkish on paper, but there's a reason why he's probably being selected for the job. And the Fed's going to be in a tough spot because with the way we're going right now, Warsh. Thank you, Kai. How could I not remember that? I don't know. Today's Monday, man. I can't think straight. So Warsh, that guy is coming in May, and policy is going to change most likely. Now, like I said, on paper, he's very hawkish if you look at his history. But why was he selected? What, to give Trump a harder time? I doubt it. So I think oil also throws a big wrench into this situation because if oil prices continue to be elevated the way they are, and if we see higher oil prices, they can't cut rates. If they do, it would be extremely irresponsible. I mean, look, anything is possible, but with high oil is going to bring in inflation for sure, right? High oil prices, we're going to see inflation, which means it really takes the strength out of their argument. So if they do it anyway, I mean, I guess they can do it anyway, but they're really going to be asking for trouble. Okay, so we got some, I don't know. I don't see a positive economic outlook going forward. I don't know. What do you see, Kai? Things that I'm seeing between all this geopolitical stuff and, with oil and all these other things, right? We'll take a look at the bond market in a moment. I don't know. I'm just not seeing an optimistic economic situation, but I could be wrong. So anyway, the bonds will give us the clues. Other than that, look, this week is pretty much empty, right? We don't have anything major going on in this country as far as the economic calendar goes. We don't have anything this week. Okay, anything else besides the FOMC meeting. So that's pretty important. Now let's take a look here. Let's get into the charts. And let's take a look at what's going on. This is the Nasdaq. Now, with all that stuff, with all that drama and all that nonsense going on, and all the overrated YouTube headlines, right? Oh, oh, okay, cool. Hey, that's good. That's good. Yeah, that's good, Kai. That's good to listen to my stream, and you're getting exercise done. Excellent. I should do that. So anyway, with all these nonsense YouTube headlines, right? Look, the Nasdaq has not changed really. It hasn't. We still hold this level, okay, which is what 594 on the Qs here. So essentially 600, right? Today's low is what is that right? Today's low is 595. No, this low must be lower. On, I'm sorry, 587. This I'm pointing to this low over here, right? That's the 587 low. You can see this range. It's pretty much a nice, clearly defined consolidation. Getting fit for the summer. Nice, nice. All right. Got to make sure you can fit into that Speedo. Okay. Anyway, I'm joking. I'm joking. But as you can see here, we don't break this support. So until we do, it's really hard to be bearish on this market, right? This is generally a higher low. Essentially, it's a higher low. So, I mean, what do you make of that? Like, I just don't see the bearish argument here yet. Until we compromise this level, until we see a break below and a persistent, meaning it breaks and it stays below, until we see that, I don't know. I don't see this. Yeah. I know you European guys, you guys wear Speedos over there. Yeah, it's all right. What was Seinfeld used to say? Not like there's anything wrong with that. Anyway, now we get Speedos here too, but it's usually the foreign guys. So, yeah. Anyway, yeah, I don't do the Speedo. I just don't look right in a Speedo, man. Sorry. So, but this looks like this is bullish to me. I mean, so this could be basically the signs of inflation because if we continue with inflation, this is obviously prices are going to rise here in the Qs, right? As we've seen. Now, my suspicion though, if things break somewhere, right, something may break somewhere. Like the bonds may cause a problem or something, we don't get those or whatever, right? Something unexpected. If the market breaks and the Nasdaq and S&P sell off, because we have not seen a sell off. Let's go to the weekly time frame. This is not a sell off. Okay, you can see the weekly here. This is not a sell off. This is a higher low. So if this breaks, we can then see a real sell off, which again, like I said, we have not seen. And what I'm suspecting could happen is if we see such a sell off and we see more of a corrective type of move, it will leak into Bitcoin, right? It will leak into all that. There he is, Alex from Romania. Let's go from Romania. I'm so glad Alex is here from Romania. All right, good to see you guys. All right, cool. Do they wear Speedos in Romania? I'm just wondering. I bet you they do. So anyway, all right, good to see you. Izzy, how are you? Izzy from Kuala Lumpur. All right, good to see you. All my people from all over the world over here. But Kuala Lumpur is just not like Romania. Okay, cool. So you guys see what I'm saying? I suspect maybe Kai, maybe you have some more insight on this. Um, if this market really has a correction, then I suspect we're going to see some pain in across the board, meaning Bitcoin too. That's why I'm just a little suspect right now. This structure right now, this structure is bullish. There's no question, right? This is bullish. So here the hour will change. Oh, really? The hour will change next week? Oh, so what do you have, like daylight savings time over there? Because yeah, we changed over here a week ago, which threw me off. But anyway, that's good to know. So because now we're -4 UTC or whatever. What the number is? Usually UTC -4. Yeah, it's on my chart here. So we used to be -5. Good to know. So you guys see this? So how does this help us? Right? How does this help us? Well, if this stays like this, then the next move we should be anticipating should look like that. Right? Which means if you're buying stocks, especially Nasdaq 100 stocks or stocks should generally be supported by this, which again can be inflationary, right? And that's it looks like the environment we're going into. That's what if we get these continued high oil prices, or if oil continues to go higher, what if we get oil at 150? Like that's going to cause problems, man. But that's going to cause inflation. So actually this week, okay. Oh, okay, cool. Yeah. So anyway, so just keep that in mind. Now let's jump over to the SPY real quick, right? Because the SPY, the S&P, is going to look similar. The Nasdaq is just a little more wild, but here's the S&P, right? It's the same deal. This is the S&P on the weekly time frame. It's the same deal. Look, right? So we have a support, an old resistance over here. We could possibly correct. That would be a more serious correction if we got to here. But even in that scenario, that's not extremely bearish. People are going to get all out of their mind or whatever. They're going to go nuts, and that might be a good buying opportunity. So these levels, like on the S&P here, 650 is the low right over here. This is a 650 low right there. And right now we're at 669. That's not that far away. Okay. So those type of lows, 650 or this low over here, 613, around there, those are like good opportunities. You could sell puts in those areas, or excuse me, bull put spreads to protect yourself. Those would be the locations to consider something like that. My IWM, I had to blow that out because the market just never continued. And I stayed, I'm stuck in my April one, but I only have one. So that one's going to be worthless. And I was long. So that's what happens, man. But I blew out the other one. I had March. I blew out of those. It was still a losing trade, but I was able to at least recover some of that money. Instead of watching it just go to zero. I saw like, okay, this market shouldn't be at this place at this time. I'm getting out. And that's what you have to do when you're long, especially when you're long. So anyway, so that's the story with these, right? They're still generally bullish. I would not, there's really no bearish argument for these, right? So like, for example, this type of pulling back, maybe if we could just test a little lower, go a little more extreme, right? That's that 650 area right there. That might be a good place to consider such positions. All right, so we're not there yet. Like this is a little early. So what do you do like in a situation like this? What if this is the bottom? Like what if this is the bottom for now and the next leg goes like this, right? The next leg over the next month just works its way back up to here, right? What if that's it? What if that's the bottom? The thing is, this area here is less than an ideal price. This is not the best price, right? A better price would be here, but the market may not go there. So what do? Well, you could take a position with smaller size to compensate for the worst price. So for example, right, just to kind of give you a specific example, because the price is up a bit here right now. So 661 is the low, right? We're at 669. So you figure, you short like the 660, I guess it would be maybe like April or even May, but probably you want shorter time on when you're short, you want shorter time. So like maybe April, 1 month out, right? April, short the April 660, buy the April 655, right? Or if you want it, if you want it to be a little cheaper, right? Collect more premium. You buy the 650. It's lower, but the thing is, if you lose, you're going to lose a lot more if this thing turns around. That's why it's tricky with those. But the idea is you just go with a smaller. You only do one spread, for example, right? Instead of selling five, you only do one. Okay, you understand? You reduce your risk by doing a smaller position. All right, so that's what I'm thinking there, right? So I'm not doing anything with that yet, but if we do get that lower push, I'll be open to that idea, selling the put and buying a put lower. All right, now let's take a look at the bond market, because the bond market is really like the main driver here. People like lose sight of this, but this is where the game begins. The bonds. So the bond market, we rejected when we had all that all that drama, a week earlier or whatever, 2 weeks ago, right? We rejected this resistance. Now, this is why support and resistance levels, having them marked on your chart, is so important, because this level could have been anticipated for bearish price action, right? And we got it. So in a situation like that, whether it's the bonds or whether it's something else, when you're messing around in a resistance area like this, it's a bad place to buy and hold. Generally, you're taking greater risk. So you could use this, what I'm showing you here, in any market, right? Just noting your support and resistance levels. Drawing lines, and I'm just drawing horizontal lines across previous highs or previous lows. But as we learned, from previous streams, you can also use things like fair value gaps and order blocks to help as well. I mean, like on this chart, I'm not going to go nuts with it, but like I can find an order block. Let's see. Like this right here is an order block. Okay. There's an order block right there. So, knowing that, if you're pushing through an order block or you have a situation and you combine that with other things like, well, there's a resistance there in general, right? You really don't want to be going long there. Okay. Maybe you're looking for some type of short setup, an aggressive short setup. Anyway, the point is this: we rejected that resistance, right, on the bond prices. Now, bond prices are attempting to hold over here, right? Do we have any support here? Yeah, we have this line back here. This right here is an order block right here. That's an order block, a bullish one. Okay, we're inside of that and we're trying to push off of it. Okay, so we have something there developing. It could be a failed low situation. Do we have any other relevant levels in the area looking back? Is this a fair value gap? Yeah, this is a small fair value gap right in here. Okay. I mean, I could draw these things all day. And yeah, you could say, well, you're just conveniently lining them up now. Well, they happen to be in the area. Okay. So it's just worth noting. You don't go nuts over this, but it's worth noting the bonds have support here, right? The bond prices have some type of support. So if price continues to hold, my first point is this is an area where support could have been anticipated. You could have said, okay, the bonds look ugly, but there is some support here. Do we break it or do we hold it? So far, it holds. All right, no problem. That means bond yields should be coming off. And if this support manages to hold, then we should be looking at a move, right? A move higher from here on the bonds. Okay, hold on a second. Let me use this one, right? We should be looking at this. Can I get my arrow? Yeah. We should be looking at something like that in the next few weeks. Okay, this is a weekly time frame. So if we're getting rising bond prices in the next few weeks, we should be getting lower yields. Now remember, this week we have the FOMC meeting. So they may give guidance or something that may continue to bolster this move, right? FOMC is notorious for moving the bonds because they're tied. There's a strong link there. Let's take a look at the yield, US 10Y. Okay, US 10Y. So the yield should be going the opposite way, right? And as you can see, the yield, this is the bond yield, the 10-year note bond yield, we're at what, 4.22%. We have a support here, which refuses to break. This thing has to break at some point, one way or the other. Okay, it found some resistance here in this area. We could see, all right, fine, it's been consolidating, but there has to be a decision at some point. Maybe maybe Warsh will have an effect on that. I don't know. Maybe when his policy comes in and he starts making moves, we'll see if he starts cutting rates like he's going to be pressured to do or whatever. But this is the 10-year note. So rate cuts don't affect this as much as other things, right? So the rate cuts usually affect the lower maturities, right? The 2-year and everything like that. Not this one. This one is usually affected more by the market itself and whether investors are willing to lend the US money or not, right? So there's been a lot of problems with that. So the point is this: in order for the stock market to continue rallying and everything being okay, this needs to pull back. Okay, we need to see yields break this support here, which is what, 3.92. We need to basically break like that 3.92, 3.90 area. We need to see yields go lower and money becomes cheaper. If this continues like this, then we have problems. Okay, so keep that in mind. That's where the clues are going to come from. It doesn't matter what all these experts are saying and blah blah blah. What matters is the cost of money, right? This is the truth. Okay, this is reality. So if this continues higher, that's not good. That's going to put a weight on the stock market. I mean, it doesn't mean that the stock market is just going to completely go to zero, but it's definitely going to have a bearish effect, right? So just keep an eye on this. This is going to be interesting, especially in light of elevated oil. Like, what's going to happen here? Are people going to stop doing business with the U.S.? Are people going to stop buying, bonds? Is the U.S. government just going to have to step in and buy all of them? What's going to happen, right? Because when bond prices rise, this goes lower. Someone is going to have to buy the bonds to keep this thing from going nuts. And it's usually the job of what? The U.S. Treasury to do it, right? Or the Federal Reserve. The U.S. has to do it. They have to basically support this thing or keep this thing from going nuts. And the only way they can do that really is by stepping in and buying themselves. So, usually other countries lend us the money and they keep this thing under control. But obviously, as you can see, we've been having problems with that. So keep an eye on this, because this is really, if trouble is going to start, it's going to start here. We haven't seen trouble yet, right? So just keep that in mind. All right, so let's move along. Let's take a look at oil and gold, right? And then we could take a look at some other ideas here. So let's start with oil, CL1. And let me know if you guys have questions about anything. Okay, so here's CL1. Okay, now this went nuts, of course, we all know. And as you can see, it's not moving in a straight line, at least not higher, not yet. Again, this all has to do with the oil situation and letting the ships through the strait, all that kind of stuff. That's a big deal, right? So whatever unfolds there is going to affect this. So technical analysis is not going to be very useful unless you're dealing with very small time frames, right? If you're trying to day trade oil, then technicals may be more helpful. But right now in this situation, I mean, this spike was nuts. And as you can see, we attempted to go higher again, right? 102 is this high over here. So you could say we have a lower high relative to this high. You could say that. But again, this is all driven by the geopolitical tension, all of it, right? So I could sit here and draw support levels and stuff like that. Look, like you have a fair value gap right here. Okay, look, that right there is a bullish fair value gap. You guys see that? You see how I drew that? So that right there is a bullish fair value gap. So in theory, if price pulls back into this area here, which happens to be around 90, right? In this area right here, in theory, that should be a place to be looking for oil long. Okay. But again, this is all geopolitical. So if things cool off over there in that region, this thing will clear right through that support with no problem, because oil really shouldn't be at these levels. Okay. And there's a lot of, this causes a lot of pressure, a lot of economic pressure here. This is inflation. This is going to cause a lot of inflationary problems unless oil could get back to under 70, back in the 60s. I mean, look how long oil was pretty tame, right, for quite some time. So this breakout was all because of this geopolitical stuff. I mean, look how tame it was, right? And we still have inflationary problems with oil here. We still have inflationary problems. What's this going to do? Right? So this is certainly, like I say, I don't know how the Fed's going to cut rates in the face of this, unless this thing pulls all the way back. I don't know. We have to see how that plays out. But you got to keep an eye on that. So it's caused by anything other than money printing. Yeah, right. Well, we have that. Imagine, Booty. We have a combination of everything, right? The money printing, we have this, we have the combination. And I don't know, that's why I say, like, I don't see how we're going to get out of this. I don't see where the economic relief comes from. I just don't see it. I'm trying not to be completely bearish here, you know, but I just don't see it. So, if we were like, if maybe if inflation was more tame and then they were cutting rates, then I could see at least some bullish arguments, right? But I just don't see this. So I don't know. I don't know what to make of that. Maybe there's something I'm missing here. So anyway, so that's oil, right? So I mean, the only way, look, oil. If you're going to play oil on the bigger picture, it's just you're just going to be dealing with high risk. There's no way around that, right? You could do options with this. You could do USO options. I mean, you could sell calls. It's ballsy, right? You could sell calls, and do like bear call spreads. You definitely have to protect yourself with this. Keep in mind, something goes wrong here, oil could be at 150 in one candle. Okay, in one candle it can do it. So that's why you have to protect yourself. Or I mean, a more maybe if something else you could do is you could buy puts below the market. So at least if it's wrong, you're just going to lose the money on those puts and you're not caught in anything. I mean, there's many ways you could do it. You have to be creative. But I mean, I suspect oil pulls back a bit, but you have to watch that support level, But again, anything can happen here. Anything can happen. So I think technicals are more valuable on smaller time frames. You're dealing with, like, 15-minute chart, whatever. You're trying to day trade oil on futures. Okay, it'll make more sense. I mean, look, we can take a look at a 5-minute chart real quick. I'm always curious to see, like, the day trade time frames on these things. Right, here's oil. I mean, look, this is the overnight, right? And this here, the white area here is the regular day session. I mean, look at this, right? It's all over the place, right? It was moving higher, pulled back. There's opportunities in here, and you can use some of those techniques like fair value gaps. Like, for example, right? I'm going to show you one over here. Look, there's a little one right here, okay? So in that area, notice, like, if you were watching that and you noted that, right? There's also a lower one over here. If you noted that and you saw the retrace into this area, look, that was worth something. Of course, you can't hold on to it because eventually it came back, but intraday, that was worth something. Look at this. Another one. This is why probably the prop firms are putting all kinds of controls on like oil and gold. They don't want you to trade oil and gold because you know why? They lose. When you catch a big move, they lose. Look at this. Look at this. Right? Pulled into this second fair value gap. There's two of them. So a lot of times you get them stacked on top of each other, right? Like here's a situation where they're stacked. Actually, in fact, I want to do a short video, a tutorial on how to deal with these when they're stacked like that, because there is a way to deal with these. And when they're stacked, right, and notice it tested the lower one, it gave you a pin bar, and then look at the rally off of that. Again, these are 5-minute candles, and I mean, this is a huge move for oil for intraday. I mean, what is that? How is that? $1.24 or one point, a dollar, $1.24 move in oil in 15 minutes. That's a lot. Okay, that's a lot on one contract. If you're capturing a micro lot, that's a lot of money. Okay, so if you're wrong, you're gonna have problems too. But anyway, you see the idea, right? So my point here is you can use intraday makes more sense for technical analysis on something like oil, right? The bigger picture, it's going to make less sense because there's so much uncertainty. Okay. I knew you were going to say something about that. I knew he was going to say something about stacked. I got to be careful with the words. I'm like, stacked is one of those words. It's one of those booty cheeks words. Oil could be right. Oil, that's why oil. That's why you can't make any forecasts on oil. Like if you're working on a 5-minute chart and you're like, okay, I'm looking for a little pullback and I'm looking for 50 cents or something. Okay, great. That's very doable. But bigger picture, is greater risk. All right, let's jump over to gold. All right, so that's oil on a 5-minute chart. So let's jump over to gold here, and let's just take a quick look at gold. Now, gold, gold. This is why you have to be careful with opinions, because you would think with all this stuff, gold should be at like 6,000 right now, right? But gold is not. So this is where technicals in a way can be helpful, because it's like, okay, gold found a resistance here, what, 54.19, and it's just having a problem. So for whatever reason, we could go and look for reasons or whatever. Okay, fine. But I just want to know the levels on gold. We have some levels. There are a number of levels here. Let's just note them all. Right? We have something around here. We have a fair value gap inside of here. So look, I'm going to just two things here. You have an order block right there. All right, I sound like an ICT guy. I'm not really an ICT guy. I just play one on YouTube. And then you have a fair value gap over here. Okay. So gold is in a supportive area. But as you can see, you can't just step into this, especially on this time frame. Look at the attempted rejections, right, off of this fair value gap. A couple of rejections here. But if you hold on to this, look, it should not be retesting it. Also, you have a lower high over here. That's not good. Also, you have another resistance fair value gap situation here. Note, look how precise these are. That's why I've been mentioning them and using them, and also they're all over my other channel, right? We talk about these all day long. Just look at this precision, right? This is a level that you could have anticipated, right? Days in advance, because the gap formed here, right? On this large candle, the gap formed here. So when you knew that, right, the gap was formed, then you're like, okay, wow, look at that. And you had a few days of advance notice to prepare for something like this. It's just you need confirmations, right? But if, let's say you were watching a smaller time frame, let's say you were watching 30-minute or 4-hour or something like that, right? And you got your confirmation in an area where you're anticipating a broader rejection. Well, that's worth something, right? You could take a position based on that, whether it's futures or options or whatever, right? Again, that's all short term. These techniques are good for short term price action, not good for long term. Okay, so just zooming out and going back to the longer term, this is where you want to pay attention to these larger levels, like these areas here. Excuse me. So gold around 5,000, that makes sense. That's a whole number, right? So that's bigger picture. That's where you would use like longer dated options, for example, in a situation like this, where you could, sell a put, buy a put below it, right? Sell 5,000, buy, whatever the next area would be, right? So 5,000, you'd be like 49.95 or something like that, right? You'd have to figure out what kind of separation, what kind of spread you'd want between them, right? Because that affects your risk. But that's the type of situation where you can consider something like that. And you do 1 month out or maybe 3 weeks out or something like that. So any little bounce, you're making money. Okay. So that's how you would use something like that. Also, you could use something like fair value gaps for price objectives. Like you have a bearish one right here. See that? There's one right there. So that's a good price objective. Price can retest that possibly. So that puts you up around what, 51.28, 51.50, this area right here, right? So that gives you some type of objective to measure your potential reward from. That's how you can go by that. Instead of doing the Captain Obvious way, where most people, they're just going to go up here. Profit objective up here. Okay, that could be a profit objective up there, but you have one that's closer. You have this one, right? So you pay attention to that. Okay, that's how you get these levels. So that's gold. Other than that, gold is in a range. Okay, gold is basically consolidating. I would not be in a hurry to buy it here. This is a little riskier. If I was going to buy it, I would at least like to see a more extreme part of the range. I mean, this is your main range right here. This is your main, that's the extremes, right? Those are your extremes. And then you have smaller parts of the range. You have something like this here, right? This is a smaller part of the range. You have like a range within a range. You see that? So a more conservative area to consider, again, would be this area, right? That area right there, which is what? What is that area? That's see 48.84. So that's below the 5,000, right? So that would probably be a more sensible area to consider if you're going to be more conservative about buying gold. Does that make sense? All right. So I covered the main markets. Let's do this real quick. I'm going to do GBTC, the ETF, okay? Because I can't go over like the spot market or the alts, but I could look at an ETF, right? So as you can see, Bitcoin has been trying to break higher. We've noticed on the big picture with the actual spot market, we've noticed what trying to push 74K, right? That happens to be around here, right? And I wrote my article yesterday on TradingView about that level, 74K. Now, if you look inside here, you look at this price action, right? This is a daily time frame. I don't see any gaps in here, right? Not in here. I see like a little price gap here, but I'm looking for fair value gaps. I don't see any, not on this chart. I bet you if we look real quick, let me just switch it over real quick. If I look at a Bitcoin chart, right? I'm not going to stay on this chart, but I bet you there's something there, right? Let's see. This is the Bitcoin chart. Actually, no, look, there's nothing there. All right, there is no official fair value gap there. All right, but all right, so here's the GBTC chart again. And the thing is, so right now we have this is a consolidation. We have this range high double top situation that's forming around the 74K level. What is the price again? Bitcoin's at 73.90, right? 73,900 area. So it's having some hesitation around 74K. If it clears this, we do have a higher low over here. If it clears this, then the next resistance is up in this area, right? So that brings us back up into like the 80K. It can go up as high as 90K, right? That this up here, this area represents the 90K area here. So the thing is, but it needs to clear this area decisively. You notice it's not doing that, right? So this can easily be a bull trap. You have to be careful of this. Now, on my other channel, I always have to write these. I have to explain these very optimistic reports, right? Because that's the bias. I mean, I don't write that stuff. I read a script. So, and then sometimes I'm very conflicted about some of the stuff that I have to read. And but that's the deal. I have to read, that stuff. And so there's a lot of optimistic stuff, but be careful, right? In my Trading View article, which is that's what that's more my opinion. I suspect this is a bear trap unless the market proves me wrong, which it can do, which is no problem. But if it fails here, what my point is, don't go nuts buying here. Okay, that's essentially my point. Don't go nuts buying here. If it fails here, then we're on our way to test these lows again. Okay, let's look at the weekly time frame, right? And this really is not very compelling. I don't know. I don't really see this as stability yet. Okay, I just don't see this yet. On this time frame, we actually have a fair value, a very large one. This is a very large fair value gap right here. Okay, on the weekly, and we're right there in the middle of it. Okay, that's a bearish fair value gap. So theoretically, Bitcoin needs to change its structure before we can really be optimistic about it, right? In my opinion. So to change its structure, we need to what? We need to pull back, maybe test the low again, something like that, right? Form a failed low or double bottom, a more clear one, a more precise one, right? And then the high that it establishes, that lower high, needs to be cleared. Okay, so it would be nice to see a higher low or something, or a failed low or a double bottom, followed by a break of that lower high. That sequence changes the structure, right? Here's an example back here. Okay, see this back here, right? This is an example. So, and this is a weekly time frame. So this situation, this process right here took what, 5 weeks, 6 weeks to form, right? It tested the low, gave you the failed low double bottom, which at that time, I'm sure people are going nuts shorting this thing, right? Or saying Bitcoin's going to zero or whatever, right? You see all those nonsense headlines. And then it eventually broke. That was the no, that was I was gonna say that was the election. No, that wasn't the election. But this break right here, that was the change. It broke the lower high and the structure changed. At that point is where you could be more optimistic. Now, it doesn't mean you avoid longs in this situation. It's just they're riskier, right? So you have to take more safety measures in this situation because this lower high, lower low could break and go lower, right? So you have to protect yourself from that scenario. There's no way to know in advance. You guys know that because I say that every week and I write that in every article, right? But there are a lot of people out there who don't understand that. So this situation, we're not out of the clear yet, right? I don't see the break of the resistance yet. We're trying, but I just don't see it, right? So in this structure that we're seeing right now, the only resistance that I see that's established is up here. That's 95K, right? We're nowhere near that. So I would suspect that if we're going to get back up there, we need to form the higher low first. We have a failed low situation or a double bottom, a mini one here, but I don't know. I'm not buying this, man. I'm just not convinced. This is not convincing me. It's just not. It's not precise. He's not. It's not formed well enough, in my opinion. Right? I mean, all we're seeing is a bunch of indecisive candles. So this is our first like sort of decisive move higher, but I want to see the attempted sell-off and then the decisive rejection of that. That would then confirm, okay, people are buying. Okay, Michael Saylor is really buying. All right? That's right. Okay, in that situation. But until then, it's all just, who knows. Do you guys follow me on that? Do you guys find that analysis helpful? Because the idea behind the stream is to help you prepare so that you can say, okay, if the market does this, then I should adjust this way. If the market does that, then I should adjust that way. The market leads, right? So I'm not sitting here saying I know everything about the market and that I know where the market's going to go. I'm using the structure to give me a guide. The structure helps me with my risk management, but it's really the fundamental catalysts that decide, right? So something fundamentally changes, then we break the resistance. What a coincidence, right? And then we could be more confident with it. But right now, I'm not confident because I don't see the structure doesn't allow me to be confident on the bullish side. If anything, if I was a bear, I don't short Bitcoin, right? Not on these time frames, as you guys know. On small time frames, I'm open to it, but not on these time frames. So if I were a bear on these time frames, like if I was willing to short, I would be looking for the short right now. It's not there yet, but that's what I would be looking for, right? And there was a 15-minute trade the other day that we had in the Telegram channel, and you know we completely missed it, right? That it was essentially this pin bar situation right here, or maybe it was this one here. No, it was a week before. This is the weekly. It was this one, right? That little pullback was actually a nice 15-minute trade, which never filled. Okay. So anyway, so I hope you guys find that useful. All right, let's move on. So I covered all the main markets, and I even gave you some Bitcoin over here. What would you guys like to see? Any stocks? Are there any particular stocks? Like I know we've been, I've been tracking Coinbase. My Coinbase position has been doing okay, right? Look, we're at $203. My average price is 190. Not bad. I don't have a lot of shares, but it's green. And and the considering I started buying at 250, I started buying here, right? Imagine this. I started buying Coinbase here. Coinbase is still not back up there, yet I am green on the position, right? That's called dollar cost averaging and doing it carefully. One share. When I started buying up here, I was only buying one share, one. And I bought one share as it broke lower. and I only bought one. And then I started buying more than one in this area here, right? Taking a little more risk at low prices. Okay. Okay. Yeah. Sure, Kai. Let's take a look. All right. So anyway, that's Coinbase. Now, if Bitcoin sells off like I suspect it might, then this is going to sell off too, right? And that's why I have an order sitting at 185, no 184. I'm looking to buy 2 shares at 184. And look, we have a fair value gap over here too, right? On a weekly, this is a fair value gap, but I'm sitting at 184 with 2 shares. And if we retest like the 160s, 150s, I'm going to attempt to buy more. Okay. In a situation where if we pull back, because I'll be looking for that broader double bottom in that situation, that could take weeks to play out. The lowest point here was what, 134? 134 was the lowest point. Okay. So if we make an attempt to test that low, that's where I'm going to try to accumulate, because I'm trying to really put together maybe 20 or 30 shares. I only have 12 right now. Okay. But they're green. So anyway, all right, NVDA, let's take a look. No, that's not it. NVDA. Okay, let's take a look. Interesting, right? So let's go to the weekly time frame, Kai. And we shouldn't be too surprised here. What a surprise! Because what? This looks just like what? What does this look like? Guys, do you guys remember? Let's see if you guys are listening. I know Kai probably knows. What chart does this resemble? And it makes sense. It should resemble it. What chart does this look like? We looked at this earlier today, but it was another chart. What chart was it? You guys remember? I'll give you guys a second because I know this it takes a little long for you guys to receive the message here. Do you guys remember? Let's see. I'm looking for fair value gaps, order blocks. I don't see anything. I see an order block right here. That's an order block. It should resemble, right, that's right, the Nasdaq. That's correct. Right. Well, the S&P, yeah, more actually, Alex from Romania. It's more the Nasdaq, but S&P is same thing. It's gonna resemble them both, but more closely tied to the Nasdaq, right? And this looks like the same consolidation that I just looked at in the Nasdaq in the Qs. So it's the same deal. If this thing breaks, the party's over in the Nasdaq. That's it, right? I mean, the next support on this thing, look at this. You got this right here. Okay, you got that one. There's some small ones. Sometimes when they're really tight, if I can only draw like basically a horizontal line through it, I don't even bother. So here, right? So we have these 2 main levels, right? These are your main levels. And then I can do something like this. I can draw this. And I could look at the 50%. Look at how the 50% lines up with this fair value gap. It lines up like exactly with it. That's the 50% retracement. Okay. So what that means is this is a very high probability fair value gap. That's what that means. When it lines up with the 50% or lower, I don't know. I don't know. That's a good question. I don't know if he is, but I mean, there's no break yet. Maybe that guy is right, and maybe these things eventually break. If this thing breaks, then it's not going to be pretty. And I know there's been like a lot of AI and what's the one with that Altman guy? They're saying that they're in trouble. OpenAI is in trouble. Whatever, blah blah blah. But those are YouTube thumbnails. You know what I mean? I don't know how accurate that stuff is. He's short, is he? Is he really? Oh, okay. Yeah, I don't know. I don't follow that guy's positions. I suspect that a lot. But when I see the thumbnails with his face all over them every time the market sells off, I'm like, all right. Like I don't go, I don't go by that. But it'd be interesting to know what his real position was. The point is, if these things break, and that guy, by the way, is a fundamental guy. So and he's early. When he was early the first time in 08, he was early. He was really early. So he maybe that's his thing. He likes to start early. He likes to take a whole bunch of pain, and maybe in a year he'll be right. So the point is, this hasn't broken yet, and your level on this thing 169.55, you 164. The order block area is basically between 169 and 164. That's this order block range right here. That's the I'll just call it support. I hate using that word order block. Okay. What would be the problem with shorting either? A portfolio needs to be short something. Yeah, well, no, of course. I mean, I'm not saying he's wrong. I follow him on Twitter, but it's quite complicated to understand him. And I don't take, okay. Yeah, so again, it's hard to follow a guy like that. You know what I mean? Because again, also, he can take a lot of pain. So he could be wrong. He could lose a whole bunch of money, and he's still in business. You know what I mean? That's why I can't take positions based on that kind of information, but it's good to know. It's like he's the opposite of Michael Saylor. You know, you have Michael Saylor on one side, and then you have that guy on the other side, and they're both named Michael. Great. So anyway, um, so that's why this is where like the technical analysis can really help give some further insight. And in this situation, if we break those supports, we have that one more support around this area here, right? That 150, 140 area. If that's cleared, then this thing's got problems, right? And I know the way this thing is tied up into everything, that's where I'm very suspect of a company like this, because yeah, he's certainly an interesting guy for sure. I agree. And the thing is, I do recognize the problem here, right? There is a problem with this stock, and that is they're investing in all of their customers. So they're essentially, their revenue is basically their money that they've invested, and they're getting it back. And then they're reporting it as revenue. That to me is a red flag, man. There's a number of reports about that, where they're basically what they do is they give OpenAI, oh, here's $1 billion, but make sure you buy our chips. Okay. And then they say, oh, by the way, look at all this revenue. And look, we have all these orders from OpenAI. Right. OpenAI is using the money that they invested. You know, they're recycling their own money, and they're translating it into revenue so that their stock goes higher, and they make billions of dollars on the shares that they own, and then they could sell them at the top or whatever, right? And then you get stuck with the bag, right? So anyway, I don't know. I'm highly suspect of that. I don't like that idea. That sounds like the old cooking the books from the early 2000s. We'll take more risk in percentage of the capital. Right. People have no clue. Right. Right. He knows risk. Okay. He knows one thing he knows is risk. So, you know, I would he's and I would say he's probably more a reliable source of information than Michael Saylor. Right? Michael Saylor just tells you he just smokes crack, and then he just tells you what he comes up with. Right? Like he's out of his mind. Or he's doing that to promote his position. So okay, whatever. He's a propaganda guy. The other guy, I don't think he's a propaganda guy. You know, people like to use his name a lot and throw it around a lot, but you know, especially when you're a bear, how do you really? Usually, bulls are propaganda guys, right? It's hard to be a propaganda bear, in my opinion, especially when everyone wants to be bullish. So, the weakness here again is that situation where they're investing in all of their customers and seeing their money come back. So when this breaks, man, I don't know. Right. So I'm suspect. I'm very suspect, especially when everyone thinks AI is, oh yeah, AI, just like the .coms, man. I saw the .coms. I was in the markets back in those days. So it sounds like a similar story to me. I don't know. All I'm saying. So seller has a conflict of interest. He wants to sell you something. So right. Right. No, that's a good point. That's a good point, Kai. Right. Sailor, certainly a conflict of interest with Sailor. And then the stuff that he says is like, man, you know, and then I'm glad they took the news items off of my other channel. I'm so glad I don't have to read those news items. I hated those news items, man. That's why I was doing Michael Saylor impressions the whole time, because I'm like, this is just nonsense. These aren't valuable news items. It's just nonsense, you know? So anyway, so yeah. So do you guys follow me on this? Right now, it manages to hold. if these two support levels that I just highlighted break, then I would not be in a hurry to invest in this thing. That's all I'm saying. Right now, if you're carrying a small position, okay, maybe this thing breaks out and works its way higher. But remember, they reported what, a week or two ago. It's this red candle over here, and they had a stellar report, and they still sold off. Right? That's a red flag. Like they're saying they're going to be making billions and trillions of dollars forever, and people are like, yeah, I don't believe you. Okay, and that's what investors said with their money. I don't believe you. So I bet you get a more accurate read from looking at something like Polymarket on their future than whatever they tell you. Does that make sense? Because people, especially insiders who know, they bet with their money. So, all right, that's that one. Let's take a look at eBay. Let's see. Why is Kai bringing up eBay? eBay. Okay, let's see. We haven't heard I'm from eBay. Talk about .coms, man. I remember when eBay IPO'd. Okay, I remember that. So let's. This is the weekly chart on eBay. Wow, eBay has come a long way, huh? Look at this. What's going on here? $91. Just a couple of years ago, this thing was at $39. Interesting. So it's like doubled in 2 years. Okay, what's going on with eBay? I thought they were like pretty much like an old, like they're a has been. I guess not, huh? So let's see what kind of levels we have here. So we have a support. Looks like we have a pretty significant support level at $78. We could basically round that to $80 around there. And we're fooling around 91. Looks like we have a range high at around, what is that, $100? Yeah, around 100. Look at that. Interesting. So you have a very clear range, a very clear consolidation. So you're in the middle of it right here. Bad place for new positions, I would suspect, right? High risk because anything can happen here. Talked on some conference and okay, so you're talking about eBay, right? So um so here's the thing, right? You're in the middle of the range. These are weekly candles. You have an inside bar from the week before. This thing could break higher. This is probably a good short-term play, intraday, or if you're doing like shorter duration options, maybe for that breakout. I don't know, but anything can happen here. This can go either way, right? He's from okay NVDA. Oh, okay. Okay, I got it. He was on some conference today. Okay. Well, he never. I mean, can you believe that guy? I don't know. He's the one who came up with the idea. Let's invest in our customers and then get our money through them. I don't know. I mean, we could use his information as he can move the stock. So, but anyway, so back to eBay. I mean, I think that the conservative play is wait for a retest of 80, right? If you can get that. Let's look at a daily time frame. What's been driving eBay? Any particular thing? Are they doing like AI or something? AI eBay? Um, I mean, that is when you have a clearly defined range like this, these are great to play with options because you can do your short options with these in a more reliable way. Of course, the range is going to break at some point, but you're selling puts here, buy puts to protect yourself, and then you're selling calls up here, and then you buy calls to protect yourself. You sell the 100 call, buy the 105, or you do an iron condor, right? You do both sets on some. I mean, in the middle of the range is actually the ideal place to do that, right? A short iron condor, you're short the middle and you're long the outside. I probably wouldn't do an iron condor on eBay. Like if I do iron condors, it's usually restricted to the S&P. But oh yeah, yeah. I don't think that guy is ever going to say anything bearish about his own company. Remember that guy. That guy's going to get paid on. He gets paid on the value of the stock, right? I'm sure he owns a nice percentage. I don't know what he owns, but he's got every reason to push that stock. Every reason. but I think it has a tail. Oh, that's interesting, Kai. That's an interesting. So people, inflation is causing people to go to eBay and do business on eBay, buy stuff from eBay because you can get cheaper stuff on there, right? That's an interesting way to look at it. So yeah, so all right. I mean, technically, you're in the middle of the range. So wait for range low, wait for range high. The general trend, of course, is bullish. So that range is a broader high or low. So that's why these, especially the low part of the range, would be extremely valuable or more valuable, right? Because you're looking for failed lows here because it's more likely to bounce in that area. Does that make sense? So interesting. Thanks for putting eBay on the radar there because this is eBay is certainly one that I paid no attention to. You know, this is like an old school name here, man. Wow. So, and interestingly enough, look at all these fair value gaps. So you got fair value gaps back here, right? These are daily time for this is a big one up here. Look at that. I mean, so again, these type of technical drawings, I guess you can call them, can at least give you some sort of heads up. You got a double top inside of the gap, right? So that could have given you some warning. It's trying to reject the gap right now. So it doesn't mean just because it's in a gap that you take a position, but it gives you a heads up. I think it serves as a helpful heads up. You know, like, oh, this thing could turn. Memory chips. Oh, yeah, okay. Yeah, yeah, the memory chips went nuts because people realized that you need memory, like in order to do your own AI where no one else can see the data that you produce. If you want to hide it or whatever, you have to basically have your own memory chips and you have to do it on your own memory configuration or whatever instead of using the cloud. That's why the value of memory chips, from what I understand, has gone nuts. Whether you have like an old cell phone or an old laptop or whatever, those memory chips are valuable, you know? So anyway, all right, you guys. So I covered all that stuff. Any other questions before I wrap this up? Thought we had a pretty interesting session today. Man, no one watches though. But oh man. All right, you guys on Twitter, you guys really should start coming over to the YouTube channel. I got to do something about this YouTube channel, man. I know I've been saying that for a long time, but I just don't have that time. I can't seem to find the time to do it, you know, because I always have something else I have to do. So anyway, all right, you guys. So I'll leave you with that. This is where we're at. I think you guys should be prepared for the week. Remember that the key highlight is going to be that FOMC meeting and how it's going to affect things like the Nasdaq, things like Bitcoin, right, and the bond market. That's the first thing you should check after the meeting as when they have their conference. How is the bond market shaped? Okay. All right, guys. So, other than that, thank you for your time. I hope you got something valuable out of the stream, and we'll do this again. All right. So, enjoy the rest of your day or the rest of the evening, wherever you are in the world. And thank you very much for watching.